All right, what's up? So, big moves in crypto, Bitcoin today. The last week, and Elon Musk is a piece of shit. That fat-headed motherfucker needs to be punched in the mouth. He knows he's doing this, and he's happy about it. And that guy it's just fucked up. Anyway, but he's a catalyst, so there's always a market catalyst. It could be Elon Musk tweets, or it could be some executive action. There's always things tied with the programmers that run these big trading accounts that run most of the currencies, most of the volume that get pumped and dumped on markets. So it could be tweets, it could be anything. Anyway, that's the fundamental analysis, that's a fundamental fact. The technical analysis is kind of obvious, and I can show you. This is a really old chart I just visited tonight because I've been looking at everything and avoiding some work, just trying to figure out why crypto markets are tanking. And anyway, besides, it kind of looks like a basketball. Like if you're going to shoot a basketball, it kind of looks like it hit the gravity, it hit the top, and then gravity took over and it's going back down. And that happens with stock charts, even in upward bull markets, right? But left side, Fibonacci retracement. So what you do, you basically, and I can't zoom to the left because this is a picture, not an actual chart. The bottom part where it says 100% in gray, let's see if I can draw this. So with Fibonacci retracement, you just chart the first point is the bottom where the price was flat. That's your first point. Then you go up to the highest peak of the highest high of the next movement. You click there, and then it gives you the Fibonacci ratios. And that's what programmers use to program their automated trading bots that most of the big firms use for cryptocurrencies. Any Forex or stocks, whatever. They don't monitor this all day, and they all do it, and that's why they spend a lot of money on getting the fastest internet connections and all that crap. So I'm sure you all heard about that. Anyway, so this guy's been tanking. So, okay, I got my chart up. So if you notice, back here in 2021 at the beginning, lots of volume, but check this out. In the middle of the screen, I can do this. Okay, maybe I can't. My drawing tool doesn't work. Okay, so I'm going to do a brush and just drawing. Okay, it's in yellow right in the middle of the screen. So you notice how that's the momentum. That's like you're breathing, right? Like the market. And it's really not a good technical, mathematical, scientific description of it. That's actually your order book, right? How many people are buying and selling, volume versus previous. And there's been less and less people buying and selling, right? Even though the price has been going up. So if you go to the top of the chart, look at it, 2021, at the very, very bottom, it says 2021, where it kind of peaked and then went down to the 38.2% and then went up. So I'm going to just show you this little yellow line, how it kind of arcs over and goes. So the price is going up and then it arced over mid-April. But in the middle, you see the momentum was going down. So that's called a bearish divergence, which means the energy, even though the price was going up, you could tell the energy was going down. So that's kind of like throwing a ball and where it's changing direction at the top of its flight, like in physics. Gravity's taking over and its energy from the initial thrust is diminished. So that's exactly what's happening here, and that's how you see it in math, and they use it with Fibonacci ratios. So anyway, and the other indicators below it are similar indicators, but they involve a lot more other indicators, so they pick up things that each other don't. So it's kind of like a collective momentum indicator of the market. I'll explain them later. A little bit complex, but anyway, the volume's really high. So right now we're at 39,000. It could go down to 30. Realistic, it could. If it does go down to 30, though, that's when you want to just get a loan on your house and go all in, because it's going to bounce back to 40 or 50 super fast. So It's very quick day trade, or not really day trade, just swing trade, but these bounce backs are great. You just have to buy them at the key levels or average down. You don't want to catch a falling knife and buy them while they're falling. You got to have a strategy. So 30,000 is right at this 38.2% ratio. It's also at this it's a 3-day chart, so that's a 200 moving average for a 3-day. We just lost a 1-day, so that's a very bearish sign, but that means the next stop is that circle on the right. So 30,000, mortgage your house on that one. Not stock trading advice, but that's going to be a hard bounce, and it's going to go up because all these other corporations that saw these companies buying at 40, 50,000 are like, oh shit, Bitcoin's at 30. I'm not going to put some in anyway because I feel like it's going to flatten out around 40. So if I can gain 25% of my balance sheet on a trade and not have to really sell more, some of these guys might make more money on that than their freaking revenues for a quarter. So anyway. Yeah, it looks like a face now, doesn't it? Yeah, look at that. It's just ridiculous. Anyway, good luck. Just pay attention. And then the Asian market should pick us up overnight, hopefully. And then the American markets will dump us around 4 in the morning. So, got to keep an eye out. These are really shitty times to trade, but start averaging in now that it's at the lows. So, you'll be set up in the long term if you have extra cash that you want to start putting away. All right, good luck.